Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Hope everybody is doing well. Guys, do me a favor, click a like, share, subscribe, all that good stuff. Support the channel. Again, hopefully I can continue to provide some good insight on a day-to-day basis. Really quick update. Then I got to take my daughter to AAU practice. For all you guys who are brand new, young parents or have been through the AAU season, think of the AAU season as taking your kid and put them through college every single spring. That's what it is. So for all you guys, you kind of know what it is. So hopefully I'll get a quick update and off the way we go. So CPI number came in today, pretty well received. Soft inflation report. NASDAQ rises 1%. Today, the market did one thing that we haven't seen in a very, very long time, is get above the previous day's chatter, right? Really quickly. That's one of those scenarios that we have not seen in about 3 weeks or so. And today we did that. The problem is when we talk about don't buy stocks on gap ups, that means, well, there's a good chance they're going to hit supply. And instantly, when the CPI report came, this played out exactly how we talk about every single day. Don't buy gap ups into supply. Don't go buy gap ups into supply. And guess what happened? The QQQs, despite being up 1% today, hit supply on the 5-day moving average perfectly. And if you bought anything in the first 10, 15 minutes on the gap up, you know what happened, right? It's basically the same thing happens every single night that we kind of cover this. Don't buy gap ups into supply. Wait for them. If there's going to be a continuation rally, there's going to be an opening range break confirmation, let those 10 o'clock highs play out. Because if not, all you're doing is literally running to the wall over and over and over again. Eventually, you got to figure out, stop running into the wall. But we gapped up into supply at one point. Things look like they were about to go red. I mean, this is how bad the sell-off was. If you look at the 5-minute move, right, this is what happened, right? This is what happened at the open. And look at this move down. The Qs literally went from 481 all the way down to 471 before starting reversal. That's a $10. That's a $10 swipe. And if you look at a lot of names today, they did do a great job getting above their previous day's channel. But the problem again, like we saw on most names, they did fade and close with a red channel. Red channel is a red candle is not what you want to see, especially coming off the bottoming out process. If you look at a bottoming out process of any stock that looks like it's about to run, it's usually followed by a series of events, 2, 3, 4, 5 days of green candles at the bottom, which basically means that there are higher closes than opens. When you have red candles, right, it means that we close lower than we open. The good thing is, right, and this is where you kind of turn around and you can make a case for both bull and bear tomorrow. Obviously, I'm prepared from both sides of the market. The one thing that we're still seeing is tremendous amount of volatility, okay? If the market was orderly, and you guys kind of see this, if the tape was orderly, you'd have a really, really good kind of stairway to heaven type of mashup. We don't, though. The pulls are extraordinary, okay? Again, you shouldn't see a $10 pull on the QQQs in an hour. That's just not normal. So the longer that we continue to stay in this headline market, in this in this macro geopolitical kind of area with Trump tweeting and the war, potentially ceasefire, not ceasefire, minerals deal, this, that, and the third, again, continue to expect the volatility. So if the bulls want to rally, right, if the bulls literally want to rally and make this meaningful, this is what we need to do for tomorrow. This is not a debate. This is not an opinion. This is what has to happen. You see this orange line? This is the 5-day moving average. Why is this 5-day moving average important? You've seen look how many times we've hit the 5-day moving average, this orange line, and faded, right? Hit the orange line, faded, 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 and today we hit the orange line and faded. If we're going to rally, the 5-day again is the shortest support, is the shortest area of supply. Whoever has control of the 5-day probably has control of the next several days. If the market wants to rally, the bulls need to reclaim 481. Okay, this is not this is not a topic of conversation. This is what has to happen, because the last time we reclaimed the 5-day moving average was all the way down here, all the way up here was the 212 highs. We started rallying for the next 5 days. So we have to get above 481. Any close above 481, then yes, I do think we could continue this dead cat bounce and we could get a move possibly back to the 10-day moving average. Here's the other flip side of the equation. The fact that we are putting in 3 candles in a row, or trying to rally but getting stuff, trying to get rallying against stuff. There's an opposite equation. Guys, look how bad Apple is, right? If anybody knows how bad Apple is, we talked about this yesterday. Apple looks terrible. Apple yesterday confirmed the macro cycle on the January 21 highs of 1938. We traded all the way down to 215 today. Guys, the market was up at one point. The NASDAQ was up at one point, almost 2%. It shouldn't happen with a leader. So it really kind of shows you where we are right now. As long as the headlines continue, as long as there is no validity in this bounce, you're going to see a lot of price action that's weak, that's completely disconnected from the overall market. So tomorrow, the bulls need to get about 481. So I'm kind of structuring my game plan tomorrow tentatively for another push. Let me give you some levels, right? Let me give you some levels. Tesla now has a 2-day bounce. The problem with this 2-day bounce was the last 3 days, the volume's getting smaller and smaller. That's not what you want to see, right? If you believe in the crescendo yesterday, today's volume bar should have been bigger than yesterday. But again, I will give it the benefit of doubt, okay? And the reason why I say I want to give it the benefit of doubt, just like the Qs, Tesla closed right under the 5-day moving average. If we can get back above, right? If we can get back above Monday's highs, right? If we can get back above Monday's highs, then yes, do I believe we could potentially get a 10-point move into the 10-day moving average on Tesla? Yeah, I would love that. I really would love that. I would love to catch 10 points on Tesla to the upside. The move to the downside, ever since it lost its 50-day moving average, 200-day moving average, was absolutely phenomenal. I would love to catch a 10-point move on Tesla. Is it going to happen? To be determined, but I'm definitely prepared to see if we can reclaim back the 5-day moving average. NVIDIA. Okay, look at NVIDIA. NVIDIA, again, is just the death spiral. Ever since earnings, the complete death spiral. Today, it did close above the 5-day moving average, so that's a good thing, right? That's a good thing. Now, let's watch the highs from March the 5th. If we can get back above the March 5th highs, then yes, we could see a move back to 119, 120. Okay, 119, 120. We saw a pretty decent amount of weekly 120 call buyers that are coming in. So, okay, cool. Again, these are the stocks I trade. Okay, these are the stocks I trade. As much as I try to convince myself, look at this, look at that. F them, F that. You're in your lane. You have your niche. Stay with your niche, right? Stay with your niche. The grass is not greenish. Stay with your niche. Just water your damn grass. Instead of looking at somebody else's grass, this one looks good, that looks good. Stick to your core. Whether you're an mini trader, option trader, forex trader, stay in your zone. Don't worry about everything else. I stick with beta. I'm going to continue to stick with beta. And these names are, they're ripe. If we're going to rally, right? If we are going to rally, it's a very, very big if. NVIDIA needs to reclaim back the 10-day moving average that it had so hard to kind of reclaim back today. The only good thing that I will say for the bulls, they did try to sell off the market 3 times today. They couldn't do it. That's a good thing, right? That's a good thing. It didn't really explode like you want, but the point is we didn't sell off. Again, at this juncture, beggars can't be choosers if you're trading on the long side. All these little baby steps matter. So again, I'm watching for the reclaim tomorrow of Tesla on the 5-day, see if it happens. I'm watching for the 10-day confirmation of NVIDIA tomorrow, see if it happens. Amazon, looks fine. Amazon looks fine. Again, another red candle, but it did reclaim back the 5-day. Let's see if Amazon can reclaim today's channels tomorrow and give a nice push to the 10-day moving average again. I'm not looking for this magnificent rally. The only one I could see with really potential measured moves, expansion measure moves, are Tesla and the other one, NVIDIA. NVIDIA maybe has, what, $3.5. Tesla from channel to channel, from supply to supply, has about 10 from its 5-day reclaim if it does it. So those are the names I want to... the last thing I want to do is fight with some random stock for 50 cents. You're 6 hours, you're up 30 cents, you're down 20 cents. You have a very small window right now, right? Until we reclaim back the 200-day moving average on the QQQs, you have a small window of aggression to the upside. You want to trade the stocks that give you dollars, not give you pennies. That's very, very important. One name that's having a hard time getting back above the 50-day moving average, and if we do get pulled tomorrow, not DraftKings, I'm sorry, is Uber. Look at Uber. You see how Uber stopped back-to-back days, literally in the same bottom? Okay, watch Uber. Again, it might not happen. It might just bounce tomorrow, but if this thing ever confirms the 50-day moving average, it can get hit as well. We talked about Nike last night. Nike continues. Again, it's not going to be like a Tesla. You're going to get a $10 move, but it looks like crap, right? Second day in a row, closed below the 50-day moving average. Paychecks, we talked about Paychecks yesterday. Remember, we talked about Paychecks again today. It lost the 50-day moving average, traded all the way down to the next support of the 89 EMA. This thing starts losing 143 and a half tomorrow. There's going to be more downside on Paycheck. So again, there's a balance, right? There's a balance in the market right now. It's not a bull market. It's sure as hell not an overall bear market. It's definitely a sell environment, and at any point the market could turn. So definitely know your levels to the upside. Definitely know your levels to the downside. Again, guys, the market is just not going to turn around and tap you on the shoulder and go, "Oh, that's it. This 2-day bounce is over." Right? It's 2 days bounce over. We're trying to go back to the lows. It's just going to do it. So don't trade with your visors on. Open your eyes, understand the sentiment, read the room, guys. We're not in 2020 with this amazing euphoric run. Hell, we're not even in 2023 with this euphoric amazing run. We are trying to get baby steps, reclaiming channel, and just to take it one day at a time. The biggest drawback that we are seeing right now continues to be the headlines. Again, it's not something new. I've been saying this for 4 days. Again, you want to try to trade less, but try to get safer entries. And every single day, I'm not trading 3, 4, 5 tickers anymore. I'm trading basically 1 or 2 tickers a day. I'm trying to stick to my core, whether it's Tesla, whether it's NVIDIA. I'm trying to stick to the names I know that I can control. I'm trying to stick to the names that I know that have option flow, and that if that option flow matches the levels that I am getting prepared for tomorrow, then absolutely, I will go long on these stocks. But if they fail and start putting in lower highs based on today's close, then yes, eventually it's going to be one of those scenarios that we will get pulled again. Guys, have a great night, everybody. God bless. Gotta go. And with God's help, I'll see you on the field tomorrow. Take care.